Hey, it's Ted McGrath. So today I'm going to talk to you about why Bitcoin is not risky, and I'm going to give you a different perspective on this, and why many people who are holding their wealth in cash to some degree is risky. People are holding bonds is risky, and who are holding non-performing assets are actually risky. And I'm going to talk to you about that in a very specific format that makes it very simple. If you look at the increase in the money supply for the U.S. over the last 100 years, there's been a compound annual growth rate of the money supply by about 7% per year. To be accurate, around 6.6% or so. So every year the money supply is increasing, and on average over the last 100 years, it's been increasing by 6 or 7%. And the problem with this is it actually decreases your purchasing power when the supply goes up. So if you're just joining me, I'm talking about why Bitcoin is not risky, and you need to be looking at it over 4-year time horizons, and why holding money in cash in the US dollar is risky, why holding money in bonds is actually very risky, why holding money in T-bills is risky. And also, even if you have money and you have a house that's going up by 7% a year, you're not actually making any returns when you look at what's really happening in the economy. So my goal is to open up the eyes of the public to what's really going on, and why when you go to the grocery store, you're like, why are things so damn expensive, right? So I'm going to walk you through specifically like how one gets ahead today, and what rates of return you have to actually earn to get ahead based on statistics and facts, and why sitting money in what used to be safe assets like bonds, you're actually losing money every year if you're sitting in safe assets. Okay. And so what used to be considered safe is now risky. And I'm going to show you why that's the case. Okay. I'm also going to show you why over the last 100 years, the dollar has debased, the purchasing power of the dollar has gone down by 97%. All right. So these are very important principles to understand as you're looking to invest in the future. Now, I'm not going to give you financial advice. I'm just going to give you data. I'm going to tell you things that I'm doing. I'm also going to tell you things that I do on a daily basis. You know, how I clocked 15.7% rate of return on Friday, how I could have very easily placed another trade, but based on the charts, but I'm not, because of a very important event that's coming up on Monday. So I'm not going to risk doing that. But I'm going to show you what I do long-term, how I think of it, and then also what I do on a daily basis as well to have a gain with trading with about 4% of my money. The other 96% is a long-term play. Now, I'm invested in Bitcoin for the long term. I'm invested in companies like MicroStrategy for the long term. They will go up and down. They do have volatility, but the volatility for me is important because it is the only way to get ahead in today's economy, where we are printing more money every single year. And this is the main concept for people to get. If you don't understand that with the money supply is going up by about 7% every year, and from January 20th to January 22nd, the money supply went up by 40% during the pandemic. So when you look at that, that was an average increase per year of about 14% every year from the 20th to 21st to 22nd, a total of about 40%. Okay. So even if you were doing 14% rates of return, in the S&P 500 index, okay, which is the top 500 companies, it's an index fund. When you invest in it, you're basically investing in the top 500 companies. A lot of people invest their money in that today. If you go look in your IRA accounts, your 401k accounts, probably some of your money is invested in that. Your advisors probably put it in that. You might have put your money in that. It's become a stable index. But if you look at what's happened with the money supply over the last 4 or 5 years, in January 20th, January 21st, January 22nd, it was going up by 14% a year. So that means your purchasing power, your ability to buy things, is going down by 14%. Make sense? Okay. So if you held investments in January of 2020, 2021, 2022, and you're like, I made 14% this year, you didn't make 14%. Because we printed 14% more money. So you made 0%. Make sense? And if you look back 100 years, the money supply has increased about 7% every year for the last 100 years. So if you're making a 7% gain in your property, the house that you hold, every single year, you're not making money. You're not. Because The money supply is being increased by 7% every single year. So you're basically keeping even with the increase in the money supply. So somebody who's making 7% a year is not getting ahead. It used to be the whole story of like, I'm going to make 10% a year. And if I make 10% a year, I'm in good shape. No, you're not. Like with today's increase in money supply, the average over the last 100 years, the increase in money supply has been 7%. Okay. So if you're making 10%, you're really only making 3% on your money. Everybody tracking this? Okay. Then you factor in taxes. Like if you make 10% and then you sell your investments and you take out taxes, you ain't making shit. And that's the reality. Okay. So you have to start looking at what are the things, like if you're flying in a plane and you have a headwind coming at you, and let's say you're flying at 500 miles per hour and you have a headwind coming at you at 500 miles per hour, it's going to be hard to make progress. All right. So if you're in an investment and you're flying ahead, or you think you're flying ahead at 10 or 14% in an investment, but the headwinds of money supply coming at you that's blowing at you is like, I'm making 14% on my investments, but the government's printing 14% more money over the last several years is what it did during COVID. Then what happens is your 14% gain is actually being pushed by a headwind of 14% more money supply being pushed, and you're making nothing. Okay. So a lot of times today, people are like, well, I'm happy putting my money in bonds. I'm happy putting my money in investments that I can get 10%. And that's actually the real risk. That is the real risk. So if you're not getting ahead, like you need to be making today 20% returns, 30% returns to really get ahead in today's economy. And the question is, how are you going to do it? What is the most sound money that one can invest in today? Now, when you're looking at money, you can kind of divide it into two things. You can look at currency and you can look at capital, right? Currency is like the dollar that I have. I'm going to go spend the dollar that I have. It's the British pound. It's the Chinese yen. Like I'm going to transact with this thing, right? And then when you look at capital, like capital is money that I'm going to invest, like money that's going to sit in real estate. That's capital, right? I'm allocating capital. It's sitting there, right? Bitcoin is a capital allocation, money that is going to sit there. It's going to be a store of value for my money, and I'm going to have it grow over time. All right. So there's a difference. I'm transacting with money and my store of value, where I want to store the value of my money, whether I put it in gold, whether I put it in real estate, whether I put it in Bitcoin. I want to store the value of my money. Well, if I'm trying to store the value of my money and I'm putting it in bonds, I'm not storing the value of my money, because if I put it in bonds, I'm losing money. Make sense? So when people say store of value, I want to store the value of my money. So if I put it in gold, I need gold based on the printing of money over the last several years. Gold needs to be going up by 10, 12, 14% a year for me to even kind of stay even. Make sense? Now, I think if you look at Bitcoin, look at the returns for yourself, but I think over the last 10 years or 8 years, the return on Bitcoin is 143%. And I know what people will say is like, well, but Bitcoin's risky. It goes up and it goes down. It goes up and it goes down. Yeah, but you want the volatility of Bitcoin. The bigger risk is staying in dying assets, okay? And the huge risk is staying in cash. And if you think cash of governments is stable, go to Argentina, okay? Look at the inflation rate in Argentina. There's been years over the course of 2020, 21, 22, 23, 24, where their inflation rate has been 200%. There's been other years recently where it's been 100% inflation. Okay. If you think the banks are safe, go look at any major currency over the last 100 years and go look, and they've had bank failures. Okay. We had a bank failure back in the 1930s during the Depression. We had bank failures in 2008. And recently in 2023, we had bank failures with Silicon Valley. So if you think your money's safe in the bank and it is for the future, think again. Right. And go try and accessing your money. If you go to the bank and you go, hey, today I want to wire $100,000 from my bank account, they're going to ask you, who's it going to? What's the purpose of you using your money? It's like, why is it any of your goddamn business how I'm using my money? Right? So the ability to even move money from your banks is a slow system. All right. So if you look at the future of where the future is really going, it's going on the blockchain. That is the new technology. That is the future. All right. Because of the speed, because the world's digital. If you try and transport, I was watching a video with Michael Saylor the other night. He's like, go try to transport gold through an airport. Okay. Like if you try and take your gold bars and go through an airport, they'll probably seize the gold from you if you have a large enough amount of gold. Because like, what are you doing with this? They're going to think you're a criminal. So the ability to transport your money, to move your money with speed today is an advantage and a benefit that you get with Bitcoin, that you get with digital money, true digital money. You don't get that advantage today with the banking system because they're a good majority of the year they're closed. You look up all the major holidays, you look on the weekends where wires don't get sent, they're closed. So how do you compete in a system like the banking system of today? And how do you stack it up against a digital system like digital currencies today, like a digital blockchain today? How do you stack it up, the banking system against the blockchain today, and compare the two technologies and go, like, who's going to thrive in the future, guys? Like, what system are people going to move to in the future? And there's not, when you look today, there's not the necessity to some degree for some people and some countries to move into Bitcoin, right? There's not the necessity level there because they're not seeing it. But you go to a country like El Salvador, there's a reason why they put a big portion of their currency and they allocated it towards Bitcoin as a strategic reserve. And if you look at their return over the last 4 years of what they've done, it's helping save the country, right? There's a reason like countries like Argentina have to start looking at this because they have 100% inflation. Countries like Venezuela, there is a need for them to be able to put their money in a store of value that's actually going to store the value of their money, because keeping it in their currency isn't going to work. So we have a huge problem if you look internationally today. If you look at the Japanese, the Japanese currency, it's failing, right? If you look at the pound after the World War, with the pound fell apart in Great Britain. So major currencies have been failing over the last 100 years. Bank failures within government, inflation problems. And if you don't think it's coming down the pike at some point for the US, even though the dollar, quote unquote, is strong, and even though we are a powerful country, one of the most powerful, if not the most powerful country, if you don't think these problems are coming down the pike, they're here because your government is printing money every single year. And at times like the pandemic, where they printed so much damn money and they gave away free money, you know what happens? People who take free money, they become criminals, right? There's no such thing as free money. If you don't exchange to get your money, you have to exchange to get your money, right? So you look at the whole time over the last 4 years, here's free money. We're just going to give money to people. They haven't done anything to earn it. They haven't done anything to work for it. We're just going to give free money. Right? That's how you put people in real poverty, because you don't allow them to produce in this lifetime. You don't allow them to exchange with society. You don't allow them to feel morale because they're productive and earning and producing. Okay? Free money is a bad idea. All right? So this is what's happening. So you are not getting ahead today. For sure, statistically, look over the last 100 years, the compound annual growth of the increase in money supply has been about 7% per year. And in times like the pandemic, it went as high as, we did 40% increase over a couple years in the money supply. 40%. So you wonder now, if you're walking around and you're going to the grocery store or you're going out to dinner and you're like, man, like why is a steak so expensive? Right? Why are my eggs so expensive? Why are my avocados so expensive? Because your purchasing power is going down. So the real risk is not doing something about it. The real risk is not getting educated on new technologies and new stores of value like Bitcoin. And if you're not getting educated on it and you're not allocating, and this is not financial advice, if I was not allocating my money over the next 10 years, 20 years, 30 years into Bitcoin, I would feel like I am getting screwed and I am going to be in serious trouble for my future. So understanding this technology, to look at what are the risks of Bitcoin. The network is massive, my friends. Okay. The network has not been hacked. It is not going to get taken down. If you look at the equivalent of 20 nuclear reactors, that is the power that is used to actually power the Bitcoin network. It's not going down. And there was all this bullshit floating around on X or on different platforms talking about quantum computers that are coming out and how quantum computers are going to crack the Bitcoin network. That the technology doesn't exist today to do that. It doesn't exist. You're talking decades into the future that technology is going to come out. And so We got all this fear that's being put into the marketplace where people just purposely put out false data and bullshit on the line to go, all right, we got to be worried about the Bitcoin network and the security of the network. It could all go down because quantum computing. No, it's not true. It's not true. And you don't think for a second that the government wouldn't be at risk if there was some super quantum computer that could hack the networks? You don't think that the top companies like Google and Apple and all of them would be concerned, and Microsoft? In a second, if there was that technology, the first thing they would be doing is upgrading their systems to protect themselves from the hack, right? So we have bigger problems, guys, way bigger problems. If you think there's some computer out there that's going to hack the Bitcoin network, it would hack all the networks out there. The internet would be hacked. Microsoft would be hacked. The top companies in the world would be hacked. The governments would be hacked. We'd be screwed. So, but people put out this false data going, oh my God, there's this new quantum computing thing that's going to hack the Bitcoin network and we need to be, and Bitcoin's risky. That's bullshit, man. It's bullshit. Not true. Not true, okay? So, not true. It's also not true that you can make 7% a year and get ahead. You can't. It's not true. It's also not true that the inflation rate is 3%. It's not true. Not true, okay? All right? Look, just look, all right? If you were sitting in bonds today, you are getting slaughtered, all right? And it may be the safe choice for people who have retired to pasture and I want to sit there on my 5% a year, fine, right? But if you hold Bitcoin over any 4-year period, you don't lose money, okay? And moving forward, it will be the superior asset. It is the superior asset right now, period. It is. It is. You're not going to transport gold through an airport. You're going to go wire money from your bank and you got to get permission to take $100,000 out because they want to know who's it going to, what's it for, what's this. Like, it is the superior asset, period, end of story. It is the superior technology. It is digital. It is speed. It is power. All right. It is security. It is financial transparency. Every transaction that's ever been made on Bitcoin, anybody, you buy Bitcoin, I buy Bitcoin, it is stored on the blockchain permanently. Nobody can change it. The amount of financial fraud that has taken place from institutions over the years who are doctoring the books and changing the books, you can't do that on the blockchain, guys. So tell me, what's the more transparent and ethical technology and form of money today? Is it what's going on in the banking systems? Is it what's going on in the stock market? Is what's going on in the corporate institutions? Or is it digital currency? What is it? Is it the blockchain technology that records every single transaction? Is it the blockchain technology that's decentralized? Is it the blockchain technology that allows people like you and me to get ahead and outpace the printing of money that's going up 7% every year? And that's on a good year. That's on a good year. When the pandemic hit, I told you, so average, it was 40% over the course of a couple of years. That's an average of 14% a year. Go look at the S&P 500 rate of return, which is the top 500 companies over the last 4 or 5 years. It's 14%. So you're earning 14% a year. You think you're getting ahead? No. Okay. The debasement of money, which basically means your purchasing power is going down every single year. You hold money in cash for the next 100 years, 100% of that money's gone. 100%. Because you're doing zero, right? You hold money, do the math on this, okay? Those of you who might, know people who have money in T-bills, which is basically you're loaning money to the government, or bonds, right, that are earning 5%. Look at the rate of return on T-bills. It's about 4%. Look at bonds, 5%, right? After taxes, if you look at it and take it out, it's back to 4% or 3%. But you would lose half the money. You would lose half of the value of your money over 18 years if you kept your money in T-bills, earning 4%. Really simple. You want to do the math on this? We'll do a fun experiment. Somebody go for it in the chat box here. Let's do a fun experiment here, okay? There's something called the rule of 72. Anybody ever heard of this? Okay, so you take the rule of 72, which basically tells you take your rate of return on your investment. So let's say you make 4% per year on an investment, right? That means, based on the rule of 72, divide 4 into 72. Somebody go ahead and do it. Divide 4 into 72, okay? And so if you divide 4 into 72, you get 18. All right? So that means if you're earning 4% per year, the rule of 72 basically says that your money will double over this time period, okay? So if I have a 4% rate of return and I divide it into 72, that's 18. That means earning 4% a year, it'll take me 18 years to double my money, okay? Which also means the inverse of that, if I'm earning 4% per year. Now follow me with this, okay? If I'm earning 4% per year, all right, but the increase of the money supply is 7% per year. All right, track me with this. Let's say you're in 4% a year, but the increase of the money supply is 7% every year. You're actually losing 3%. Does this make sense? Because when the money supply goes up, your purchasing power goes down. Okay, put in plain English, right? If you look during the pandemic, you imagine the money supply was a pizza pie, right? It was a pizza pie. Or imagine the money supply was this bottle right here, okay? This is all the money in the world right here, this bottle of water. That's all the money in the world, right? Okay? And what happens is you have like a little piece of this water, of this money supply here. Like let's go here, like a little cap here. You've got your slice of the entire money supply is this cap right here, okay? So this is all the money in the world. This is your slice, right? Okay, everybody tracking? So now what happens is over the last 4 years with COVID, 2020, 2021, 22, 23, 24, the effects of it continues. Let's say the money supply goes up by 50% or even doubles, right? So if the money supply doubles, just for illustrative purposes, right? It doubles. Now, all of a sudden, this was the money supply, right? There goes your money, right? This was the money supply. But now, the money supply just got twice as big. The money supply is now twice as big because we printed money. Everybody tracking this? Money supply, twice as big. During COVID, we print money. This was the money supply before COVID. We print a whole bunch of money. This is the money supply. It's twice as big, right? Now, your same little slice of water, right? Your slice of the money supply right here. Yeah? That's your slice of the money supply. Before, you had this slice of the money supply, right? So that was your slice. Now, we had double in. You got this plus this. The money supply is double, but you still got your little slice of money. What happened to your money? Your money got cut in half, man. That's what happened. Your money got cut in half. So during COVID, whatever money you had, if you had $1 million during COVID and we doubled the money supply over 4 or 5 years, right? The money you had in your bank account basically cut in half. Everybody tracking this? Okay. This is what's happening in the world today. And if you think that we're going to stop printing money, think again, because we're in so much damn debt in the United States that the only way to start bailing out the government is keep printing more money. We're in so much debt. So now the money that you had a slice of the pie, you had a slice of the water, right? Before, your slice of the water was okay. It was decent, right? You thought it was decent. Over the last 100 years, the money supply has been going up by 7%. So you have your slice of the water, money supply keeps going up, keeps going up, keeps going up, keeps going up, keeps going up. Your slice of the money supply keeps going down unless you're earning 7% per year. COVID hits. Holy shit, man. The money supply doubles. And now, to keep pace now it's not a 7% increase in the money supply. It's a 14% increase in the money supply. So the increase in the money supply is doubling. The rate of growth of the money supply is doubling. So now your rate of return that you're earning on your assets, whatever it was before, you got to double just to keep up. You got to double. Where are you going to get that double from? Where are you going to get it from? Where? You're going to get it from the S&P 500 that does 14% a year on average? When the last January 20th, 21st, 22nd, the money supply went up by 14%. You made no money in those years. Zero, nothing, nada, niente, nothing. Where are you going to put your money long term? With governments failing, right? With currencies over the last 100 years, no major currency has gone and lived through where there wasn't bank failures, including the U.S. And the world reserve was created, like the global world reserve was created, and all currencies were linked to the U.S. dollar back in 1944, guys. And it was linked to the U.S. dollar. And do you know why the rest of the countries were willing to have the U.S. be the global reserve and link their currencies to the U.S. dollar? Do you know why? Because at the time, the US dollar was backed by gold. So in 1944, when all the countries came together, it was called the Bretton Woods system, and all the countries came together. They're like, great, the US dollar is going to be the world reserve, right? And so all the other currencies are going to be pegged to the US dollar because the US dollar is strong because it's backed by gold in 1944. But in 1971, when Nixon came in and he says, we're pulling off the gold standard and the dollar is no longer backed by the reserve of golds, the dollar's not backed by anything anymore. So as that started to happen, countries started to go away and start doing their own thing and stopped pegging to the dollar. Does this make sense? All right. So when you look at the strength of the dollar, is the dollar strong? Yeah, in relative terms to other countries, sure. When Argentina's inflation is 100% a year, our dollar is strong relative to that, right? When Venezuela's is 60, 70% a year, our dollar is strong relative to that, all right? But it still doesn't change the fact that the money supply, the printing of money has gone gangbusters over the last 4 years. So you can't earn 7% to get ahead. You can't earn 10% to get ahead, guys. You have to start looking for other assets and other places to store the value of your money so that you can get ahead and your family can thrive and prosper. And at the end of the day, if you think gold, like what's the most scarce asset on planet Earth? It's Bitcoin. It is the most scarce asset on planet Earth. And the reason for it is because you can't make more Bitcoin. Hey, every year, anything that goes up in supply, my friends, anything that goes up in supply will eventually devalue. Okay, will eventually devalue. So gold, for example, gold, we mine about 2 to 3% more gold every single year. So if we mine 2 to 3% more gold every year, that means that the value, the value goes down because as the supply goes up, the value actually goes down. So it loses its value over time. So a lot of times people think, well, gold's a great store of value. Like gold's going to continue to go up. Well, now, if gold's going 2 to 3% per year, if we're mining 2 to 3% more per year in gold, guys, then at the end of the day, gold is losing its value over time. All right. Now with Bitcoin, which makes it extraordinarily different, is you will only have 21 million Bitcoin ever. So because you can't mine more Bitcoin over time, eventually, like there will never be more than 21 million. You can mine more today. There's about 19 million in supply, but there's a fixed supply. There is not a fixed supply of gold. All right. As far as we know, we keep mining more and we keep mining more and we keep mining more. All right. So the most scarce asset on planet Earth today is Bitcoin. There's more land still out there. Right now, if you go look at property and real estate on Miami Beach or New York City, yeah, it's scarce. So it's a good store of value, right? But if you look at Bitcoin, it's supremely scarce because you can't make any more Bitcoin than there ever is because it's built into the protocol. Okay? It's built into the protocol. There will only ever be 21 million Bitcoin. So when you look at holding something that's fixed, meaning it's scarce, there will never be more than 21 million. As the money supply is going up and we print more and more money, just like we have over the last 100 years in the US, 7% a year, 7% a year, 7% a year, every year for the last 100 years. So as the money supply is going up and the value of the dollar is going down, but as the Bitcoin supply is not going up, it's only at 21 million. Okay. And so as the money supply is going up and the dollar is being devalued and other currencies in the world are being devalued, where are you going to put your money to store your value? Are you going to store the value of your money in gold, which the supply goes up by 2 to 3% per year? Are you going to store your money in a bank where you earn what, 1%, 2%, 3%? And that doesn't even keep pace with the increase of the money supply. So if your money's sitting in the bank and you're making 1%, 2%, and the money supply is going up by 7%, you're making negative 5%. Are you going to put your money in bonds where bonds, maybe if you're in corporate bonds, you're making 5%, but the money supply is going up by 7% on a good year and you're negative 2%? Or are you going to put your money in the S&P 500, which will do 14% and has averaged 14%, but when the pandemic hit and the money supply was going up by 14% per year, you're not making any money. So where are you going to invest your money? That's the question. Where are you going to put it? And that's the big myth today, that people think that Bitcoin is risky. Sure, if you're going to put money in Bitcoin and you're looking to make money over the next week or 2 weeks or 3 weeks, like that's not a store of value, right? You're looking just to get returns. Then we can talk about trading, and I have a whole chart I'll show you in a little bit about trading. And I do that on a daily basis where I can make high returns by trading in and out. But I'm not using that as a store of value. Okay. The store of value is I'm holding Bitcoin. I'm using it as a store of value because I know it is an asset that will outpace the printing of money. And so that's why I've invested my money in Bitcoin. Make sense? And so what is the true risk then? So this is the question to answer. And if you look at the economists, of course, like where do they, of course, do they want people to invest money into the government? Of course, T-bills, bonds, loans. Those are loans you're giving to the government. You're loaning the government money. Of course, the agenda would be to push you, especially older people, to put your money in safe things like bonds and loan the government money, and the government will give you a 5% rate of return or a 4% rate of return, or put your money in my bank and we'll keep it safe and we'll give you 1 to 2%. Of course, they're going to come out with reports that tell you inflation is 3%, but it's not true. So if you wanted to get somebody's money and say, invest with me, you're going to come out with reports and say, hey, the inflation rate is really only 3%. Give us your money. We'll give you 5% as you put money into government bonds, as you put money into, as you loan the government money, because that's what a bond is. You loan them money and they give you a rate of return, right? So they're not going to give you the true inflation rate, but you feel the true inflation rate because your purchasing power is going down every single year. And if you look around and you wonder why more and more people are going into debt, more and more people are not financially free, more and more people are enslaved to the economy, more and more people are using credit cards that are charging you on average 28% a year, more and more people are going towards these systems because you get a shitty rate of return when you're loaning money to the government. You get a shitty rate of return in the bank. For most people are investing in the stock market with fund managers who are charging you 1%. Maybe you're going to get 10% because that's supposed to be a good rate of return. After taxes and 10%, you take out 30%, that's 7. After your fund manager is charging you 1%, you're getting 6%. And the money supply is going up by 7%. You're net making 6%. You're losing negative 1% every single year. Come on, man. Where are you going to put your money? Where? Right? And we're the country that's in good shape. Thank God Trump is coming in, man. He can turn some things around. But where are you going to put your money? All right? So, and the idea that you can go out and become a real estate expert all day long, and you can spend the time doing that, and you can go through learning and do the paperwork and wait for 30 days or 60 days for the deal to close and go get your banking loans and deal with the same damn system. And the people who have mastered that, more power to you, man. Or you can pick up your phone and you can buy Bitcoin. Click, and your work is done. And you can hold the damn thing. And I'm not suggesting here that you go do it because I'm not giving financial advice because I'm not going to do that. I'm suggesting you get educated on it. Speed, ease, flexibility, ability to transport it, fixed supply. Okay? Corporations now are adding Bitcoin to their balance sheet. MicroStrategy has $40 billion on their balance sheet. Mara is another company, a Bitcoin mining company that just added Bitcoin to their balance sheet. Riot added to their balance sheet. Tesla has it. Okay? Governments like El Salvador are adding it. Cynthia Lummis, the new senator that's coming in, is proposing a Bitcoin reserve. Trump is saying that we are going to be friendly to Bitcoin. And he announced at the Bitcoin conference that we will have a strategic Bitcoin reserve. Where do you think the world's going? Okay? The number one, okay? The fund manager on the face of the planet, BlackRock, is recommending that you allocate 1 to 2% of your money into Bitcoin. Take the average of that, that's 1.5%. The largest fundamental institution that controls the most money on the planet is recommending. What is going on where people aren't waking up to the fact that the greater risk is sitting in cash, the greater risk is putting money in bonds, the greater risk is sitting in shitty stock market returns at 10% where you're really not getting ahead. You're not. So what are you going to do? And yeah, I'm not saying gold is the second best, right? And in terms of store of value, gold's the second best. But at the end of the day, it was like Michael Saylor says, it was really great, guys, when we had bow and arrows. Like, it was a great way to go to war when we had bow and arrows. But then they came along with something called the gun. Do you remember in Indiana Jones, like these guys come up with swords in the Temple of Doom, and they are Raiders of the Lost Ark, and they come up with swords, and they got like all these ninja moves and all this stuff, and he takes out his gun and he shoots them, right? Right. So it was great, but wooden ships were great back in the day, man, until we invented steel, right? Okay. Books were great. It was amazing. You could pick up a book and read a book today until we got the iPhone and the Kindle. Right? It was great going to Blockbuster, man. It was amazing going to Blockbuster. You walk in a Blockbuster, you take a video off the shelf, you spend 30 minutes or 40 minutes or an hour to just take the trip and decide what movie. Now you go to Netflix, man. So to think that the world is not moving to Bitcoin, to think that a large percentage of the $450 trillion of money that's out there that can be reallocated, to think that a percentage of that is not going to Bitcoin over time is idiotic. It's idiotic because it is the hardest money that it exists. It is the most fixed and scarce asset on the face of the planet. It is the most functional asset in terms of speed and the ability to transform and move your money. You have control 24/7, 365. You can hold it yourself and maintain custody yourself. It has been classified as a commodity now, and it also is digital property. And governments are adopting it as their strategic reserve. And when the U.S. apes into this and decides to put some of their money into Bitcoin as a strategic reserve, if they don't, we are then the dumbest country in the world. But I gotta imagine they're going to when Trump gets into office. And when they do, other governments are going to follow. Because just like in the past, when other countries wanted to link up to the United States and say, hey, in 1944, hey, the United States is the global currency, man. And we're going to link our currency to the United States to the dollar. Countries agreed to that in 1944. Then we got off the gold standard and everybody was like, well, clearly the dollar's not worth what it used to be, but the dollar's still strong to some degree, right? So when the U.S. decides to implement this strategy, if they do, when they do, I hope they do, there's other governments that are going to follow. And it's just going to grow and grow. And then the asset's going to become more stable for those of you who are risk adverse, right? Who are putting your money in T-bonds, but you're risking your money, T-bills, putting your money in bonds because you're losing money every year. So what are you going to do? You're risking your money by putting it in the bank. And if you look at an asset if you look up Bitcoin's return over the last 8 years, I believe it's 143% return. Over the last 10 years, it's over 200% rate of return. All right. But just look at it over the last 8 years. And look at it over every 4-year period. It's never lost money. So if I was going to allocate a percentage of my wealth, which I already have, a large percentage to Bitcoin, I would decide on what percentage am I comfortable doing it with. I would learn more and get educated about the asset. And then I would allocate a portion to know that, wow, I'm finally in something that can outpace the printing of fucking money, man. You know? And I'm finally allocating to something that is sound money. Sound money. Now, this doesn't go to say, because people are going, well, what's the utility of Bitcoin? I can't use it. What's the utility of it? It's just like gold. You don't walk into a McDonald's and say, here's my gold bar. Give me a cheeseburger, right? It's a store of value. You don't walk into a McDonald's and be like, hey, I'm going to pay you with my real estate. Do you? No. Right? You store the value of your money in assets that you believe are going to go up over time. Period. So what are you going to put it in? You want to go out, buy real estate? Great. Go get super educated on it. Go deal with all the loopholes you got to jump through. Okay? Or do you want to pick up your phone and make a purchase? You know, speed, low barrier to entry, fast, store of value, fixed, only 21 million ever, period, ever, of Bitcoin. That's it. Scarce asset. Right? So we know as the demand is increasing, as governments are considering putting their money in, governments like El Salvador have already done it, more and more companies, there's dozens of companies that have added Bitcoin to their balance sheet now, okay? So there's companies considering it, like Microsoft considered adding Bitcoin to their balance sheet, right? But again, Microsoft has been around for how many years, right? They're a leader in the world. There's not a need per se when you're sitting at the top of the mountain and you're comfortable and you're cozy in your beautiful freaking mansion, right, of a company, and you're dominating the world. There's not really a need to start looking elsewhere at this point because you're so dominating. But take the average Joe on the street who's in credit card debt. Take the country whose inflation rates are 100%. There is a need for the average person. There is a need for people to put their money in something that's going to accrete in value over time, going to increase in value over time. Okay. So that's the game. That's the long-term play. There is no more superior asset on the face of the planet. Bitcoin, period, end of story, period. Okay? So it is, the superior asset is fixed in supply. 21 million ever. That's it. All right? So I personally got in years and years ago in 2018. I bought a whole chunk more back in 2023 when it was at $30,000. I bought my first Bitcoin when it was $3,000. Okay. So again, I got in early, way early. But if I'm looking at it now and I were making decisions now, I would be looking at things over the next 4, 8, 10 years of where is it going to go. And it is going to become a store of value, and it is going to become mainstream, and it's already becoming mainstream. Okay. The percentage of people that own crypto, I think 1 in 5 people in the United States own crypto now. It's 20% of the population. All right, so great. So that's the long term. So now what do we do on a daily basis to have a little fun, right? Okay, so I got my players. I invest in them. I hold them long term. I own Bitcoin. I own Tesla. I own MicroStrategy. MicroStrategy is a whole nother conversation. If you want to know about MicroStrategy, I can't even see the chat right now. I don't know what's happening on my screen, but put in the chat. If you want to know about MicroStrategy, I'll tell you all about it. I'm super studied on it. I'm invested in it. I got it. My first MicroStrategy shares in 2020. The majority that I purchased was in 2024 at the beginning of the year. Over the last year, MicroStrategy is up 500% to date. So why is Bitcoin up 128% to date and MicroStrategy is up approximately 500%? Why is that? That's a whole nother conversation, okay? But what we're going to get into right now is on a daily basis, I like to trade a percentage of my money. So what do I do with my money on a daily basis to have a gain? I like to trade money. I think it's fun. If you don't do it correctly, you can lose money. Warning. Any of the investments that I've invested in that I've just talked about, I've been holding them for years. I bought Tesla back in 2017. So I've been holding these investments for a year. I rolled out of Tesla earlier in the year, put it into MicroStrategy. MicroStrategy since has gone on a rocket ride. That was the right move. Then I rolled some amount of money back into Tesla, and I'm up huge on Tesla again. Okay. So that's playing the game, but let's talk about the daily game. All right. I'm going to show you something that's kind of fun. And with the news coming in of what's happening on Monday with MicroStrategy getting added to the QQQ, I trade a little bit of my money on a daily basis. I'd say at any given time, I allocate about 4% to trade. Okay. Maybe 3%. All right. So I'm going to show you what I'm doing and show you a trade that I might have placed. And I'm going to show you a trade that I did place that worked out and one that I might have placed that I don't know that's going to work out, which is why I didn't place it. Okay. So here it is. I'm going to show you the charts that I use to trade. And this is going to be fun because I think this will be a very fun game. Okay. So if you were watching this the other day, these are the charts that I use to trade. These are not my development. So if you wanted to do something like this, you can go to TradingView. TradingView is something that I subscribe to that gives you this whole layout. And then I Invest Answers, the plugins that I use to get these nice graphy lines here. You see like the yellow line that goes to blue. That's as a result of Invest Answers, okay? So I'm just going to show you the chart and what this means, basically. And I'm not sure. You're going to probably have to tune in a little bit to see this. But so what does it mean, like, when you trade, okay? So this is I'm basically trading MicroStrategy here, okay? Now, I hold MicroStrategy, Tesla, Bitcoin. Those are my long-term investments that I hold. But I like to trade MicroStrategy almost on a daily basis. Now, here's why I like it. Because it is volatile. And so the fact that it is volatile, I like to trade it. So when it goes up, I'm super happy because I hold a bunch of MicroStrategy long term. And then when MicroStrategy goes down, I'm trading it so I can make money even when it's going down. Does this make sense? So what I'm trading here, just to give you a little idea on it, I'm trading, I made 15.7% on this trade the other day. And I will place another trade either on Monday or Tuesday, but I made 15.7% on this trade the other day. I made it in 16 hours. I made 15.7%. And the way that I do it is simple. I trade something called MSTU, which is a derivative of MicroStrategy. A derivative means just another form, right? It derives from MicroStrategy. So a bunch of guys got together. They're like, we're going to create this fund that kind of mirrors MicroStrategy and its performance, except our fund, the goal is to get 2x of MicroStrategy's return. So if MicroStrategy goes up 12% like it did on Friday, then this goes up 24%. If MicroStrategy goes down 12% like it did the day before, then this goes down 24%. It goes down at a 2x. Okay. Again, trading like this is risky, particularly if you don't know what you're doing. When you first get involved in anything, you're probably going to make some mistakes. I know I've made my fair share of mistakes. Have I lost money trading? Absolutely. When I first got in the game, I watched the charts for 30 days and I studied it and I observed it. Then I also have a paper trader where I can trade with paper money and I can practice and do that. And then I go with real money when I feel comfortable. So on Friday, obviously I was trading with real money. I made 15.7%. So this is the charts that I run by here. Okay. Now it's pretty simple, guys. If you want to write it down, you can check it out. Again, I am not recommending at all that you buy this. MSTU, it's basically the 2x of MicroStrategy. Okay. So when MicroStrategy goes up 10%, it goes up 20%. When MicroStrategy goes down 10%, it goes down about 20%. It goes down 2x and up 2x, comparable to MicroStrategy. If you don't know what MicroStrategy is, first go study Bitcoin. Second, go study MicroStrategy, because Bitcoin is the most pure form. MicroStrategy is the company, the corporation that owns the most amount of Bitcoin on the face of the planet, because they own 40 plus billion of Bitcoin. And then, so I trade MicroStrategy because it is super volatile. Okay. But I trade another form of it called MSTU. So when you go look up MicroStrategy, you're going to look up MSTR. I could actually just show you right here. Hold on. Great. So let me just show you this so you can see. Right. So here's MicroStrategy, right? Everybody see this? This is MicroStrategy. So if you look, it's at 370 right now. So on Friday, it went up 11%. If you see over here. And so you look at the return there, 11.76%. Now, obviously 2 days before it went down like 11, 12%. Okay. It's very volatile. I love the volatility. I've done extremely well holding it. What I'm about to show you is how I trade it. And I only trade it with a very small percentage of my money. So that's MicroStrategy. Here's a different form of MicroStrategy, you know, like a derivative, like it's derived from MicroStrategy, so it's another form of it. So this is MSTU, and so you can see that it went up 22% on Friday. Everybody see that? So you see 2x long MicroStrategy daily. Okay, so when I'm trading, I like the 2x leverage, because if I was trading MicroStrategy that day, my gains would have been about 11%. If I was trading MSTU, the 2x of MicroStrategy, my gains would have been 22%. Make sense? That day. All right. So great. So now you know that I'm trading the 2x of MicroStrategy. So now that you know that, let's go to the trading chart, and let me just show you the trading chart. Okay. So now we go to the trading chart, and I'll show you how I make decisions of when I'm going to buy the 2x of MicroStrategy or when I'm going to sell the 2x of MicroStrategy. Okay. So great. So on Friday, was this Friday? Yeah, Friday early in the morning, I placed a trade on MicroStrategy. I actually traded it before the market opened, so it's technically before the market opens. You can actually buy before the rest of the world starts trading. You can actually buy stuff before the market opens. You go into any brokerage account like Fidelity, you can do it in Webull, you can do it in Robinhood, you can do it in. So I watched these charts even before the market opened. So I got in to 2x MicroStrategy. I got in at about where it was priced at about 10.25. Okay. Now, if you see where it ended at the end of the day up here to the top left, it ended at 12.8. So it ended up like 24%, right? But the signal for me to buy on my charts, this is the green signal that says buy here. So you see this green arrow right here? You look on the chart, the green arrow here is a buy signal. And then you watch this yellow line, which is the trend line here. And this yellow line, the moment it turns blue, it's the second buy signal. And so not to get in the details of this, if you want to actually learn this, I'm teaching you the overview. I'm giving credit to TradingView and Invest Answers because I bought these two softwares, I plugged them together, and this is how I get the charts. So if you want to study this and learn exactly how it's done and go buy the softwares, you can go to them. I don't get any affiliate commissions by recommending it, okay? So there's no benefit to me whatsoever by recommending this except helping you, okay? So you get the yellow here. The green says buy. The yellow then all of a sudden turns blue and it says buy. So you can see at this low point here, you probably can't see because it's small, but I bought in at 10.25 the moment it said buy. And you can see that's at the bottom. If you see my cursor here, it's at the bottom. Then this sucker goes way up. You watch the line. You see the blue line going way up. And then you see this red arrow up here. And this becomes the signal to sell. And the red arrow pops up around 12.4. Okay? Around 12.4. Okay? And that is one of the first signs to sell. So to make it simple, I got a green arrow that says buy. I got a red arrow that says sell. That's basically how the decisions are made. There's a couple other things that tell you when to buy and sell, but I'm not going to get into that now. It's like green, buy, red, sell. If you want to get the details of it, again, go to Invest Answers and you can get this own chart for yourself and you can start doing it, okay? In Invest Answers, they call it pair trading on steroids. I'm not representing that company at all. I'm not speaking for them at all. I'm not telling you to trade. I'm saying if you want to get educated, you can go learn about that there. I'm just showing you what I do. I decided that I was going to trade MicroStrategy because it is volatile. So in trading, I picked a stock that I know about. Now, at the same time, when you buy low here, the green arrow comes and says buy, and then the red arrow says sell. Oh, I sold out when the red arrow popped up. And I cashed out for the day, and I cashed out at close to 16%. So I made 16%, right, in a day. I made 16% in a day by cashing out on the red arrow. 16% a day. I wish I could see your chats. Something happened with my screen where I can't see it for some reason right now, and that's a bummer. So I'm sorry. Otherwise, I would be answering your questions. Oh, here it is. Okay, great. Okay, great. So if you have questions, John, what's up, bud? And then we have a meme on there. Isn't Bitcoin mining unlimited? So we'll run. Yeah, the last Bitcoin will be mined in something like 2141 or whatever. But the majority of Bitcoin are already mined. All right. So now, if you look at this chart here, the red says sell. So I sold out of my position on Friday. I cashed out. Now, the red arrow says sell. Now, when I flip out of 2x MicroStrategy called MSTU and I sell it, MSTU, I can then bet against MicroStrategy. See, I sell out of one asset where I made the gains, and then I can flip to the 2x that bets against MicroStrategy when the red arrow shows up. So I buy in when it's green down here, and it flips. You see the green arrow? I buy in here, and it flips to the blue over here on the trend line. And then I sell out at red, and I make my profit of 17%. Now, if the red is also now, it's bearish. It's saying MicroStrategy may go down, is what it's saying. So at that moment, if I wanted to bet against MicroStrategy going down, I could have placed a bet at of MicroStrategy going down. And then when MicroStrategy goes down, I would make money as well. But here's why I did not bet against MicroStrategy on Friday, okay? I cashed out. I made 16% in a day. If you're just joining us, again, I trade with about 3 to 4% of my money. That's it. The other 96%, I find the winners, I invest in the winners, and I hold the winners. Sometimes I'll take profits, but for the most part, I hold the winners, okay? But with my trading, I trade almost daily, guys. And so the reason I did not place a trade to bet against MicroStrategy on Friday, even though the red arrow says, it's at its height, it's going to be dropping. The reason I did not do that is because when I trade, I look at the events of the day. And the events of the day are telling us that on Monday, MicroStrategy is going to be added to what's called the QQQ. So times where I do not trade, like when Trump got in and when the elections were happening and we didn't know who was going to be elected president, I wasn't trading for those 2 or 3 days. Because when those big events happen, you don't know what's going to happen. I don't even trust the charts at that point, even though the charts are right 90% of the time when I make trades. But when big events happen, like the elections were happening over those 2, 3, 4 days, I'm like, I'm not trading today, okay? I'm just going to hold my long-term positions. big news happened that on Monday, a bunch of money is going to flow into MicroStrategy. So even though my trading charts say, oh, my MicroStrategy looks like it's at the top right now, it's going to go down maybe over the next day, over the next 2 days, because MicroStrategy is being added to the QQQ, which is basically a fund that mirrors the top 100 companies, because it's being added to that officially on Monday the 23rd, where money officially will start flowing in on Monday the 23rd. I think that because money's flowing in, it's possible that the charts that say MicroStrategy might go down on Monday, I think it's possible that it might still go up. So I'm not going to place a trade. Make sense? So when I'm trading, and again, I trade on a daily basis. I trade with 3 to 4% of my money. If you're ever going to trade, you need to get the right technology to do it. You need to watch it. I would trade with paper money to start. When you go to TradingView, there's an option to trade with paper money. You can use Alpaca, which is an exchange that allows you to trade with paper money. If I were to start trading, I would watch it. I would get educated. I would trade with paper money. I would get my skill set down, and then I would trade with real money, because you can lose. Okay. And when I follow the charts so far have had a 90% win rate. When I bet against the charts, I lose. It's pretty simple. Okay. So that's how I trade. And it's pretty simple. So we started off this entire live stream, and I started it off talking about Bitcoin and why Bitcoin is actually not risky, and why holding your money in bonds is actually the real risk. Holding your money even in stuff that's going to earn 10% a year is the real risk. So you need to be in an asset that is going to go up. You need to be an asset that is fixed, right? Like Bitcoin is fixed in supply. This is how I started off the live stream. There's only 21 million Bitcoin. And so in times of inflation, Bitcoin is an incredible asset to own because it has a fixed supply. Make sense? Anything that you can make more of will lose its value. When we print more money, you lose your purchasing power. When more gold gets mined, the value of gold over time will go down. 2 to 3% more supply of gold a year. Anytime there's more supply of something, the value, it will deteriorate the value of that asset. Make sense? Okay. So, and the increase in the money supply by 7% on average over the last 100 years. So if you're not making 7% a year on your investments, you're actually just going nowhere. Make sense? Right? So that's how I started off the live stream. And then I'm ending the live stream with trading. So philosophically, it was about where are you going to put your money over the next 4 years, 10 years, 20 years, 100 years? What's a superior asset? Bitcoin. It just is. Period. And then on a daily basis, like if you want to play games and you want to trade with a little bit of your money, I do that because I like to make some extra income and I like to trade. And days on Friday where it goes well and I make 16%, I'm super happy. And days where I trade and I don't listen to the charts, I can lose money, and I have lost money before. Okay. So trading is risky. And I think if I were investing and starting from scratch and I knew nothing about investing, I've been in the investment business since I was 21 years old. So I've also been invested in Bitcoin since 2018. I bought my first Bitcoin at $3,000. I also have been invested in Tesla before. I think Tesla split. I think the stock split, right? Yeah. So I was invested in Tesla, I think, in 2016. And I've been invested in MicroStrategy. My first shares I bought in 2020. And then my biggest allocation to MicroStrategy, 99% of it has been in early 2024. So when I'm investing long-term, if I were starting as an investor and I started to realize that most of the stuff that people are investing in is junk, right? It's actually the most risky. Bonds are super risky because you're not making any money. And S&P 500, will get you a little bit ahead over time, but not much. So when you look at what's the most sound asset, it's Bitcoin, right? Real estate, obviously, for big tax deductions that people get. People are doing commercial real estate who know what they're doing. They can get larger rates of turn, get tax benefits. So I can see the rationale in that. I can see people putting money in gold to some degree who don't know anything about Bitcoin and haven't gotten educated. But Bitcoin is clearly the superior asset if you understand it. So if I were first starting out and I didn't know about the new world and new technology of the blockchain and the new technology of the new currency of Bitcoin and different cryptocurrencies, I would first go get educated in it. And the first step I would take is figure out what are my long-term investments going to be. And so my recommendation is never to sit there and put money in Bitcoin and hope that it goes up over the next 6 months. Like, that's not how to play the game. It's a store of value, meaning you store it there so the value of your money doesn't go down. So it goes up. And storing it means you put it there and you hold it for 4 years, 10 years, 20 years. And if you're doing that, I don't see any risk whatsoever, period. Okay. Now, inherent in anything, is there a risk inherent in everything? Yeah. You know, like I could walk out there on the balcony and fall off. There's a risk to that, right? I could drive my car and get in an accident. There's a risk to that. The whole Bitcoin network could go down. There's a risk to that. If the Bitcoin network gets hacked, all governments will get hacked. All major companies will get hacked. Like, we'll have bigger problems. Okay. So there's inherent risk in anything to some degree, right? But if I were investing, I would look at what is the most sound investment for my future. And then I would get educated on that thing. I would know it inside and outside. And then based on knowing the data inside and outside, backwards and forwards, I would allocate a certain amount of my money to that. For me, the great majority of my portfolio is in MicroStrategy, Bitcoin, and Tesla. Okay. So I'm betting my future on it because it is the sound bet to have money in Bitcoin. It is the sound strategy. Holding money in the dollar is not the sound strategy. Holding money in bonds is not sound at all. It is risky as hell to have your money in bonds because you're losing money every single year. Okay. You look like you're making money. You're not. The money supply has gone up 7% every year for the last 100 years. If you actually do the actual math, it's 6.57% or something. Call it 7%. So if the supply is going up by 7% every year and you're making 5%, you're making a negative 2%, period. So I would get educated on these new technologies like Bitcoin. I would understand it. And then based on understanding it, if I were starting brand new, I would allocate some of my money to it. I would watch it because I'm invested. I would learn more about it. I would get excited about it. I would get used to the volatility because, like, none of us like to see when it goes down 11%. None of us like to see that, but I'm not selling it. Okay. And I've been through I watched Bitcoin go up in 2017 and just crashed down. I went up to 20 and it went down to 3. I bought it at 3. Okay. I watched Bitcoin in 2020. I watched it go all the way up, right? And I watched it crash down to 15 and 18. I bought a whole bunch more at 30, whole bunch more. Okay. And so I've watched these things happen. Okay. And I've lived through it. So I understand the volatility, right? But I do know over every 4-year period, if you held Bitcoin, you will not lose your money. Now, I can't guarantee that, but if I was betting on my future, that would be the future that I would bet on. So I would get educated. I would learn about it and I would study it and I would listen to the data about it and I wouldn't listen to the FUD. And I also wouldn't listen to the economic reports of the government coming out and telling you that the inflation is 3%. I wouldn't do that. And, you know, there's news coming out that we're in a recession now. We've been in a recession. Let's be real. Come on, dude. If we printed 40% more money from 2020, 2021, 2022, money supply went up by 14%, your purchasing power went down by 14%. And the next year went down by 14%. It went down by 14%. You don't call that recession when 50% of your money disappears over 3-year period, just disappears. If you had $1 million in cash, 50% went away in 3 years. You don't call that a recession on your money? Even if we're not deeming it a recession in the economy, you don't call what happened in 2020, 21? It was crashing the economy. It looked like you were getting ahead. You weren't getting ahead. If you owned the assets, if you had your money in the market where the market zoomed up, you're in good shape. If you're holding your money in cash, you were screwed. Right? So you got to pay attention to what's actually going on in the economy. And you got to learn for yourself. And there's a lot of smart people out there with a lot of good data. Okay. And you should study and follow some people that you trust and learn. But don't just look at the news reports coming out. And some of these news stations are great, but some of them you watch them and they're reading questions off a cue card. Like, I forget I won't say the news station because I don't remember, so I don't want to spread false data. But there was a group interviewing, a well-known news station interviewing MicroStrategy. And hey, some people are calling MicroStrategy a Ponzi scheme. How would you respond to that? MicroStrategy is they're borrowing money and then they're investing that money back into Bitcoin, right? And as their stock goes up, they're borrowing more money to invest more money back in Bitcoin. So that is some people are calling it a Ponzi scheme. How would you respond to that, Michael Saylor, who's the founder of MicroStrategy? Like, what kind of question is that? If you did any research whatsoever on MicroStrategy, you'd be an idiot to say that it was a Ponzi scheme. An absolute moron, because it's not. It's a lie. And so some dumbass picks up a piece of paper and asks that question on the news and asks the question. People are calling, well, what people are calling it this? Huh? The yo-yo that's got his money sitting in cash, earning 0% a year, earning negative 7% because the money supply is going up by 7%? Who's saying that, huh? Like, who is actually saying that? So you got somebody interviewing him, asking him this question. It's not a Ponzi scheme, and his response is very simple. It's like, it's no different of MicroStrategy. What MicroStrategy is doing, they are getting they're getting loans. They're getting loans. People are loaning the money, and they're taking that money and they're buying Bitcoin. And then when their stock price goes up, they're issuing more stock into the marketplace, and they're taking the money that they're getting from people who are buying the stock, and they're buying more Bitcoin. And so the newscaster is like, yeah, well, so that seems like is that a Ponzi scheme? No. Like, what happens? What do real estate investors do, right? As they invest money into real estate, the asset goes up, they take some of the money out, and some of them invest it back into additional real estate. Metaphorically, that's what MicroStrategy is doing with Bitcoin. Okay? So don't follow the news on some of these stations that don't know what they're talking about. Don't listen to what's the true effect on your purchasing power. That's what you need to look at. You need to be concerned about you and your family and your fellow man, and what's the true effect on your purchasing power right now. What is it? And the true effect is when the money supply goes up by 7% a year, like it has year after year, year after year for the last 100 years, the true effect is your purchasing power goes down by 7% per year, which is why food is more expensive, which is why during the pandemic, everything got super expensive because the money supply was going up by 14% a year. So just pay attention to that. It's why when you go out to a restaurant, I was sitting with a friend last night. I'm like, dude, this was kind of cheap, like $125 per person, right? That's kind of cheap, right? I'm used to going out to restaurants now that used to be really nice restaurants where we'd pay like for a couple to go out for $250, and now you go to a nice restaurant and you're walking out with a $500 bill for two people. What happened, dude? Like, this isn't even a Michelin star, man. What happened? You're walking out with a plus gratuity and tax, or you're walking out with a $500. What's going on, man? Right? So that's really what's happening. And so if you're feeling the effects on your ability to buy things and you feel like your purchasing power is going down, there is a reason for that. And if you don't do something about it, you're going to be in that same position 2, 3, 4 years from now, but it's going to get worse because we can't keep up the printing of money and continue to have people thrive when they're sitting in investments that are doing 5, 7, 8, 9%. It doesn't work. The math doesn't fundamentally work, period. Okay? So when Trump comes in and when Elon helps and supports with this, and we actually do something about the national debt and we do something about the high taxes, then we might have a fighting chance, right? But as of right now, what's happened over the last 4 or 5 years and what's been going on for the last 100 years with currencies around the world, it's been bank failures all over the world for the last 100 years, including the U.S. Currencies, just like World War, World War II, the pound got destroyed after World War II, right? So look at what's gone on with currencies over the last 100 years. They get in trouble, and they get in big trouble, and banks get in serious trouble, and economies get in super trouble, and then you have hyperinflation. And by the time you blink and you wake up, you're like, wow, why did everything get so expensive? And there's poor people out there walking around, and they don't know why their grocery bills went up. You know, they don't know why. And I'm telling you why it happened. This whole live stream, I told you why it happened. Okay? So then what are you going to do about it? Go get educated on Bitcoin. If you want volatility that's even higher, right? Go get educated on MicroStrategy. All right? And volatility, to me, it's good. It's a good thing. When I'm holding an asset over the long term, I want the volatility, guys. I want the volatility. When I'm trading on a daily basis, I won't trade anything that's not volatile. Okay. Now, again, difference between trading and investing long-term. Investing long-term, I'm holding things that I believe in. I'm holding things that I fully am educated in, and I'm holding things that have done well for me over the last several years. Okay. As I'm trading, I love the volatility. So I'm looking for things that have high volatility that I know about and I'm educated on, and that's when I'm trading. Okay. So first step, if I were starting from brand new, number one, I'd go get educated on the new world technology of the blockchain. Okay. If you don't know what blockchain means, it's really simple. Okay. Block means ledger, right? So when you go to your bank statement, this is kind of a metaphor, and you open up your bank on a daily basis and you look at your bank statement, it's called a ledger, right? You're looking at a ledger, right? So on the blockchain, a block is a ledger, right? Transactions, every time we buy Bitcoin, it's recorded on the ledger, okay? That transaction that's recorded on the ledger, it can never be changed, period. It's there forever, 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 forever. It can never be changed, okay? So it's on the ledger. And then you have a chain, blockchain, a chain of ledgers, a chain. So I buy Bitcoin, you buy Bitcoin, you buy Bitcoin, you buy Bitcoin. It's on a block, right? It's recorded on a block, right? Then we have a chain of these blocks, more and more people buying. So we have a blockchain, right? We have a blockchain that's recorded all the transactions of Bitcoin that's ever taken place. And then that blockchain, right, is the technology. Make sense? And Bitcoin operates on a protocol, a set of rules, right? It operates on a set of rules. And the set of rules that was put into Bitcoin is that there will only ever be 21 million Bitcoin, period. So it operates on the protocol, okay? And so that's what's going on. It's as simple as that. And so the objection that we get a lot of times from people is like, oh, it's not backed by anything. How does it have any value? It's just people are confused. They don't understand. Your dollar is not backed by anything. It's not backed by gold. Your dollar is backed by nothing, okay? So it's not backed by anything, all right? And in fact, when you put your money into a bank, the banks turn it over multiple times. So that's called the velocity of money. So you put $1 in the bank, and the bank can the bank can loan out 95% of its deposits and turn it over and over and over. And that's how the bank makes money. So you put the money in the bank, they give you a measly 1%, 2%, 0.5%, and they use your money, and then they turn it over and they turn it over and they turn it over into different investments, and they velocitize the money. That's how they make money. In fact, there was a regulation that came out during COVID where some banks didn't have to hold any deposits in there. Like there's normally a 5% rule, and they lifted some of that in terms of the 5% rule, where some banks weren't even holding any of the money. They were allowed to just turn over the money. So that's how the banks do it. What are you doing? How are you going to velocitize your money? Now, I'm not saying turn it over, but how are you going to speed up the returns on your money to outpace inflation, which is like a fire on your ass chasing you? And if you don't outpace it, you're going to get burnt. Okay. So number one, you go learn about the most superior asset on the planet that will be in the future as well. And you go learn about it. You get educated, Bitcoin. Okay. Number two, get educated about it, learn about it, study it, watch people who know, and fact check it, right? Fact check it. Take a look at the facts, right? Even stuff that I'm saying, go fact check it, right? Fact check it. And then watch other people and see what they're saying. And then make your decision. Is this the right asset choice for me? Some people will go no, and they'll go no, like I'm just going to invest in real estate because that's what I know. Great. I know a lot of people have done extremely well in real estate. Amazing. Okay. I personally like the speed of Bitcoin. I like the simplicity of it. I like that I can pick it up and buy it on my phone right now. I don't have to do any contracts with anybody. I don't have to get a loan. I don't have to do any of that. Nothing. Okay. So you decide what's best for you, get educated. And if I were in that situation starting out, I would decide what percentage might I want to allocate to it after I get educated. Then after I learned Bitcoin, the next thing I would do after I understood Bitcoin is I would go understand MicroStrategy. Why? Because it's the most intelligent financial move of the last 100 years. That's why. Pretty simple. And when you understand it, you'll see that. And go take a look at who just joined. I think it's called the board of MicroStrategy. Go take a look at who just joined the board. Go take a look. Okay. So I would then go get educated on MicroStrategy. All right. And I would learn because the two are very symbiotic. And those are two that I would study, I would learn, I would understand, then I would decide what do I want to do. Okay. But to not know and to not understand these assets is just like, I think it's just irresponsible. You'll have other people who tell you putting your money in Bitcoin is irresponsible. Hey, man, I was sitting here at my church telling some of my friends sitting on the deck when it was at 9,000. I'm like, dude, what are you doing? Like, put some money in Bitcoin. This was back in 2020. On New Year's Eve, we were sitting around. It was 20,000. I was telling everybody at the table, what do you put some damn money in? What are you doing? Put some money in Bitcoin. Right? People thought back then it was irresponsible. People look at it today and say it's irresponsible. Okay? And then the last thing is, don't all of a sudden make a decision to put your money in Bitcoin. And if you do, it's your decision. If you decide and then all of a sudden it drops 5 or 10% and flip out and be like, oh, it was the worst decision that I ever made. Like, if I were to invest in Bitcoin and I were starting brand new today, I would have the time horizon of 4 years at least. And that way, and know that you are going to experience upticks and downticks. We just had an 11% or 12% drawback or 13%. It's going to happen again. We know it's going to happen again. Okay? We know, right? We know we're going to have another 12%, 13% uptick. Those of us who've been around through the bull markets and have been watching them for the last 3, this is the third. I guess my third that I've been part of. Okay? So those of us who've been around for it, we've watched this. We've been through this. We've woken up to the stomach dropping things of like, oh my God, we just went down 30%, right? We've woken up to that. But if I'm looking at it to make a decision, I'm going to store my money for the long term, right? Not for the next 6 months, for the long term. I would get educated. I would go, great, what percentage do I want to put in this if I believe in it? And I would hold it and I would weather through the storms, because we are going to come to the end of the bull run. And for people who maybe don't watch the end of the video and they go, I watched this video and I decided I was going to buy Bitcoin. And then in July or August or September, it dropped. We know at the end of every bull run, since the history of the beginning of bull runs, Bitcoin drops. So do I think we're going to have a rocket ride over the next 6 months? Yes. Do I think we will see a drop? Absolutely. I do. Okay. So over the next 4 years, do I think absolutely 100% Bitcoin will have positive ROI and will outpace the cost of an increase of inflation because of the money supply being printed, more money being printed? Absolutely. Do I think Bitcoin will be up? Absolutely. 4-year period. Okay. So that's my sermon for the day. Hope it serves you. Go get educated. Go check out more stuff on Bitcoin. Once you understand that, go learn about MicroStrategy. And if you want to learn trading, go check out TradingView and go check out Invest Answers, 2 very, very reliable platforms that I've used as well. Thanks so much. Talk to you guys soon.